speaking about trends, prevailing trends, and institutional guys picking an avenue, one of the big ones has been data centers, this AI revolution. So maybe this is a good opportunity to touch on industrial and, the outlook for that asset class. How are you guys thinking about industrial? And even if you look across Canada, are there certain provinces that are much better opportunities? Is it anywhere that's kind of near a big city? How do you think about industrial?
So we view industrial a little differently than a lot of other groups view industrial. Our perspective on industrial real estate is that it's fairly transitional. So what is core real estate? What is core industrial today? A decade from now probably isn't core real estate. So things change in industrial, whether it's the clear height, the door to floor ratio, power requirements, all those kinds of physical attributes about the building are very transitional. They ebb and they flow and they change over time. So we aren't heavily now data centers is different. I view data centers as a completely separate asset class. It's not something that we spend a lot of time on. I think it's got I'm sure it has lots of great opportunities, and there are reasons why groups are spending a lot of time there. It's outside, frankly, of our skill set. And I look at it that's more like a technology play than a real estate play. The real estate box itself is fairly straightforward, but it's all the equipment that goes on inside and understanding what has to go inside, what makes one location better than another location, and more importantly, how quickly all the infrastructure inside depreciates. Understanding all of that is a skill set that we aren't really armed very well to understand. So we don't spend a lot of time in data centers, but traditional industrial real estate, our bias has always been towards small bay, multi-tenant, the stuff that you can buy for well below replacement cost, or could over the last few years could buy for well below replacement cost. Today you can't because the rents have sort of caught up to it. But things that are just not being built anymore, because I think fundamentally that's a good place to at least start, right? Start where supply is stifled. And the reason why supply is stifled there is because it's too expensive to build, and the tenants that use it require locations that are typically inside urban boundaries, and there's not a lot of land inside. It's certainly not cheap enough to buy to build this stuff. So you're buying product that's so far below replacement cost, it's sort of irreplaceable. The other part of the industrial world, or the distribution, is sort of, and I'm making a crude sort of bifurcation in the market. I know there's more nuance in this, but just for the moment, the other side of that coin is the large bay, what I'd call bomber warehouse distribution buildings. And that's a market unto itself. I think you need tenant relationships to really be successful there. And you need access to land. You sort of need a land bank, right? Because to buy, a 400,000 foot or 1 million square foot warehouse leased to Amazon for 20 years, single tenant building, with growth built into it, and you pay a 4.5 cap because the Amazon credit is so good. I'm not sure how you make money there, to be totally honest. Right. I think you can check a box by saying we now own core industrial, and we have a weighting to core industrial in the GTA, and this building is in Milton, and it's like, and the guy's paying $24 a foot, and it's Amazon, and they'll be there for 20 years, and then they've got renewal rights. I'm still not perfectly clear on how you make money in those kinds of deals. You can get a running yield, I suppose, of some kind, but I'm not sure how you outperform. So it's not really a market we've spent a lot of time in. And the other part of that is, 15-year, if it's a 15-year lease, or often I guess it's probably a 10-year lease or a 15-year lease, 15 years goes by pretty quick, and I'm not sure how that negotiation goes at the end. Okay, so you're there, you got 1 million square feet leased to Amazon, and they're up in 2 years. So you stare Amazon down. And by the way, you're in Milton, so there's another piece of land. There's another farm, not too far away, where a guy's just sitting there, like twiddling his thumbs, waiting for the Amazon lease, because he's got his farm and he's zoned, and he can build the building in 6 months, right? These are boxes that are not very complicated to build. So there doesn't seem to be any limit on supply, or any real limit on supply. And the fundamental physical characteristics required by the tenant in those kinds of buildings changes over time. So what feels like a great building today might not feel like a great building 15 years from now.
Right.
And you're held hostage to whatever that tenant wants to do, because God forbid you're slapped back with 1 million square feet to lease. Now what do?
Yeah.
That's a very difficult set of facts.
That would be scary. And you have to hope that the trends are the exact same as today.
Sort of.
People need warehousing. There's the same thing going on with distribution centers.
Now, all that, and there's growth. But now, all that said, people have made a lot of money in industrial over the last 15 years. So we've been wrong. Okay, just for total clarity, we've been fundamentally incorrect we missed that boat 10, 15 years ago. Okay, a lot of groups have made a lot of money in industrial. We didn't see it coming, and we missed that boat. I'm still not unhappy with the bet that we made, because I think on a risk-weighted basis, I think the low probability outcome is what unfolded, not the high probability outcome. And that is, there was an extraordinary run-up in demand for space. We couldn't build it fast enough. And there's been a fundamental shift in the way people do business and the way the economy runs and the way inventory is stored and shipped and distributed. So there was like sort of a perfect storm in industrial. We didn't see it coming. So we missed that. But to say it's going to happen again, low probability, in my view, low probability bet, and it's not high on our radar screen.
Interesting. This is, I have heard.
We bought the small bay stuff.
Yeah.
And the high probability outcome unfolded.
Right.
We made money on it. It's tougher to scale, right? It's because you're buying fundamentally smaller assets. But we at least saw the high probability outcome and the high returns, which for me on a risk-weighted basis is a way better bet.